Now to the stock market and a notable run by the bulls. The Dow Industrials closed up again on Friday to a record high over 16,000. It was the 7th consecutive week of gains for Wall Street. Let's take a closer look with Michael Santoli, senior columnist for Yahoo Finance. Michael, good morning.
Morning.
S&P was also up over 1,800 first time. How significant is this, you think?
The round numbers themselves aren't that significant. The fact that the S&P 500 is up 27% this year, it's up 160% since the bull market started in March of 2009. Is somewhat significant. It's basically a broad recognition of the forces that have been driving things, right? Corporate profits are very strong at high levels. Money's very cheap and freely available. The Federal Reserve's kind of making sure of that. And this latest 7-week sprint is pretty extraordinary. We rarely get 7 weeks up in a row. But I think the general story has been the same here. It's a recognition that the corporate sector is very strong, and slow and steady economic growth is good enough when rates are this low.
We saw that healthcare stocks led this market rise. Why are they more attractive to investors now?
Well, it's interesting. First of all, it has been a very inclusive rally. In other words, almost all sectors are up a lot. Healthcare is dominated by these big companies who have tons of cash. They're sharing a lot of that cash with investors in dividends and buying back their own stock. So I feel like healthcare is just kind of right in the sweet spot of what people like about the condition of corporate America right now.
And from what I'm hearing, I mean, the momentum is still sort of in the upward direction here, right? I mean, there's nothing stopping this right now.
Well, the one thing you can't argue about is the momentum. And a lot of the things these little clues you look for a market that might be topping out or ahead of a pretty devastating decline are really not there, because it has been very broad and individuals are finally kind of catching on and putting money into the market. But it's not a cheap market anymore. Obviously, relative to corporate profits, we've come a long way. And so maybe we're going to have a little bit of a gut check at some point, maybe when the Federal Reserve changes course on its policies.
You know, I hate to sound like a pessimist, but what comes up has to come down. So is there a possibility we're in the bubble right now?
I doubt we're actually in the bubble. One of the reasons is everyone's talking about a bubble. It rarely happens that way. But I think if we actually extrapolate these trends, very cheap money for a very long time, and people getting increasingly confident in bidding up stocks and other risky assets, it ends there perhaps at some point. But there's a long way here. We're really in the equivalent of the kind of the middle of where we were in the 80s and the 90s. Eventually, it became a very unattractive price to buy stocks, but not right now.
The 2 months this year when stocks actually went down was June and August, which were the 2 months when the Fed was coincidentally talking about tapering, pulling back on its stimulus. The betting now is that's probably next spring, right? I mean, so what happens then, do we think?
Well, the market is going to try to kind of front run that possibility. So when it seems very likely that the Fed is going to sort of change the trajectory and do less, I do think the markets will have a little bit of static at that point. Could be the perfect occasion for a pullback. So could, contentious budget negotiations in Washington. So I do think if we're heading to March, interest rates are going to rise in advance of that, and then we have to see if the Fed kind of is going to stick to its guns and remove some of that accommodation, as they say.
Interesting, though. I mean, government shutdown didn't derail this rally either.
Oh, the sequester.
Yeah,
That's right.
All right, Michael Santoli, thanks so much.